All right, all right. We are back at the Grit Won't Quit studio in Belmar. We have a very special guest. We have Steve Green, who I've known for over 15 years. Good morning, Steve. How are you today?
Morning, Tom. How are you? Thanks for having me on, man.
You bet. 15 years we've known each other.
We have. It's a long time.
We were introduced by your friend Kenny Monroe.
Kenny Monroe. Yes, indeed.
You know what's funny is Kenny's cousin now works at Wingman, Heather.
Oh, does he?
Yeah.
Does she really?
Yep. She started about 7 weeks ago.
All right. Yeah. Kenny's a good dude.
So,
Lifelong friend.
Lifelong friend. Tom's River guy, right?
He is.
That's how you guys knew each other?
Yeah. Went to school together. Yeah. Kenny actually got me into the board of Big Brothers Big Sisters, and I didn't know that I was his replacement. I thought I was doing it with him.
Yep.
But apparently I was his replacement, and he kind of ducked out. So, yeah.
I've been a Big Brother for over 10 years, so
Yeah.
I know all about the system, and my wife was involved for a couple of years. So crazy, but that's wild that all these years later we get to have you on the podcast.
Yeah, 100%. Happy to be here. Thanks,
Podcast is getting better guests every day. Check.
Yeah.
All right, so you own Green Label Title Insurance.
Yeah.
All titles not created equally.
It is not. No, it is not. I think title is a very misunderstood industry, and that's what makes it kind of. If I'll use the term dark, right?
Okay.
Because nobody really knows what title does. They don't know what title is, so they kind of leave it to their professionals, whether it's a real estate agent, attorney, mortgage lender, to kind of like drive who's picking title.
So anyone could pick title, correct?
In New Jersey, it's the buyer or the refinancer's responsibility, whatever it is, obligation to choose title. So no one can make you choose who you're using for title insurance.
Okay. But a lot of people recommend based on other people in the transaction.
Correct. So my business is primarily driven by real estate agents. Second would be attorneys. And they kind of choose and pick the agencies that they're most comfortable with, if that makes sense.
It makes the deal easy.
100%.
And people that they have a relationship with, they can get on the phone if something's not going right and say, hey, Steve, what's going on with this title here?
Yes. And in a perfect world, that's exactly how it would work, right?
Okay.
They would call up and say, hey, I have a problem here. I can get Jane or Joe or whoever on the phone. Unfortunately, sometimes that's not how it's driven.
Okay.
Right? So it's driven more by maybe what that professional is getting or receiving. I don't want to go too deep into that.
I got it.
Right, but it's not always done in the best interest of the client. And that's always been my biggest gripe with the industry. The thing I struggle with the most is it's not done in an altruistic way.
Understood.
Yeah.
So how do you're in Monmouth County, you're one of the larger title insurance companies
thanks.
from what I can see.
Yeah.
So how do you deal with that? How the grit of that one? How do you kind of take that one on?
Yeah, grit. That's a
Because
good
you're
term
also a
for
man
it.
of faith, and you're
I
a
am.
man of honesty and integrity and doing the right thing.
Yep.
So kind of how does that play into some of these things that are in this dark web?
Yeah, that's a great question. So a lot of my competitors and people I go back. So right, it's a battle of faith, as you mentioned, and flesh. Right, we got to close deals. We have to make money. But
And you have a team and an office.
I do, yeah.
And you
we
have overhead to support.
Yeah. We got to support. We got to close deals. We got to figure out a way to, like everyone else, to make the deal happen. If it doesn't close, we don't get paid. In fact, if it doesn't close, it could cost us money.
Yeah, because you might have done the work.
Oh, yeah, we've done all the back end, the searching work, right? So no one pays us back for that. But, I really believe, like I said, as a man of my faith, I think that's kind of the guiding principle of what I use to run my business. I truly believe that seeking profit first is folly. I'm really looking to be the best title company, not the biggest. And there's really a clear delineation on that. If you want to be the biggest, you really got to bend the rules. You got to go out on a limb. You have to do things that maybe aren't right. And when that happens, the buyer doesn't understand that they're going to be involved in that, right? They're going to be involved in a claim or whatever else is going on, whether it's tied lands or a judgment or an old payoff, right? They're going to be involved in that. So I think what happens a lot of times is title companies kind of they look to get numbers, right? So order number 212 is no different than order number 918. So you kind of just become the Walmart of title companies, right? So I'm not looking to do that.
You want to be more of the Mercedes-Benz.
I want to be in the Mercedes-Benz. That's a fantastic way of putting it. I really do.
So you don't want to just be that volume play. You want to do the right jobs for the right clients at the right cost structures, so that it's beneficial for the client to have a great experience, as beneficial to your agency to run a business.
100%.
And you can't you can't be the bottom of the barrel, because someone can always beat you on price. You can't. That's not a sustainable business model.
It is not.
And it's not a business model like if you want to be here in 20 years, 30 years from now, like just running on price. Again, Walmart is an exception to the rule, but again, the scalability of their systems have gotten them to that place. But I mean, again, the average company is not going to be able to be at the bottom. Not. And you recently read a book by Peter Thiel that talks about
the one. Being the one, I forget what the name of the title.
0 to 1.
0 to 1. Yes.
0 to 1, and 0 to 1 talks about how technology helps in the monopoly world, but not in the world of guys competing just against each other.
Correct.
And beating each other up on price.
Yep. And I think that's really title. So a few of the things you said are, man, hit home. So first and foremost, a lot of title companies become desperate. Right, so what they do is they just basically go out and they just try to get deals. They funnel deals in.
And that when you say go out and get them, you're talking they go out to meet with realtors. They go out and meet the mortgage guy. Go out and meet the attorney.
Yeah, I'm proud to say I've probably lost maybe 2 clients over my 23 years in business, and the 2 or 3 that I lost are generally clients that kind of push that envelope, where it's like, that's not really something that you should be doing. Mm-hmm. But when you're a title company, especially now in today's world, and you're trying to figure out how to make ends meet, you're trying to figure out how to pay your people, sometimes you overlook those little things, right? And you're just like, let's just roll with it. Let's just fund this, do this, go there. And title is one of those industries where it really kind of just pushes its people to the brink. Right, so when we're good, we hire a bunch of people. When we're down, we fire a bunch of people.
Cut costs at all measures.
So you really try to push the people that you're dealing with or that you have to the brink. So more mistakes happen. Wire fraud is a huge issue. Right, taxes not getting paid is a huge issue. So I think a lot of title companies take that approach, and that approach stems from I need money. I have to make money. And what happens when you get into that funnel is everyone is just transactional. You said it before, right? Our relationships are now transactional. How much am I giving you? What am I doing for you? How much am I paying? Right? And it loses sight of what we're really supposed to be doing, which is taking care of the buyers, taking care of the sellers, making sure the deal is done right. And I get it. It's a fine line, but there has to be some kind of moral or ethical background that you have. And I just think in title that's lost.
The moral compass.
Gone. Totally gone.
Which is really a shame, because the buyer doesn't know any of this exists.
They don't.
The seller doesn't know any of this. The buyer, they're closing on probably the biggest purchase of their life, and they have no idea what's going on behind the scenes.
Zero. Absolutely zero. And it's a shame because they don't understand the process as it comes in, right? So a lot of times what will happen is, they're worried about the rate, right? So they're talking to the mortgage guy about the rate. They're worried about the inspection. So they're talking with the realtors about the home inspection. They're worried about all these other things, the moving companies, switching over their appliance, utilities, all those kinds of things. And they lose sight of some of the things that matter the most. And I think that's part of the process of the profession is really just use this title company. Just go this way. They're fine. They'll do okay. And they don't really understand that they can shop around. There might be a lower rate. There might be a better company. And I think just people kind of just go that way. And I get it. I understand, right? Your title what's my title company actually doing?
And it's in a time where they're in they're super excited about moving in. They're super nervous that they have to start paying a new mortgage or a bigger number, and they just want to get it done. And in the world we live in today, no one wants to read anything.
No.
So they just all right, well, this is good. Good enough.
That's fine.
And if it doesn't work out, we'll just deal with it. But really, when that happens, there could be some ramifications.
100%.
Like real ramifications.
Oh yeah, and that, absolutely. And if I tell you it's a commodity, meaning it's the same price whether you come to me or somebody else, you're just going to think, okay, it's just a process that I have to go through and these kind of fees that I have to pay. But there's no real deep dive into, well, who's doing that and what's doing that. I'll tell you that for a lot of the real estate attorneys and realtors that we work with, after attorney review, we are the ones kind of pushing it. We're the ones funding. We're the ones controlling what's going on, working with the banks. So I think there's a fundamental misunderstanding of what title and settlement kind of does for the buyers and the sellers.
So one thing you said early on in this conversation, I just want to kind of hit back on for the viewer is 23 years.
Yeah.
So you've been doing this for 23 years, and you're in your mid 40s. So this is your only career.
This is what I've been doing.
This is what you've been doing since you finished school.
Yeah. The first job I had when I came out was with a company called Cintas, the uniform people.
I remember them.
Yeah. They're still around. And I remember just being in a warehouse and they were cleaning
sales?
mats. No, I was doing the management program.
Yeah.
They were cleaning mats and nobody spoke English, and it was just, I don't know, it's just not something that I felt.
This is for me.
Yeah, I was like, oh my God. So I worked for two different title companies before going out on my own. And at the time I thought, hey, if this isn't it, I can do something else. I was 28 at the time.
What's the worst that could happen?
What's the worst that could happen?
You didn't have kids at the time.
Yeah, who cares? Who cares? Doesn't matter.
Yep.
And, now I've been in it for a long time. We have a great, base of clients. But, it's still a struggle. It's still it's a very competitive industry, a very cutthroat industry. And as I said in the beginning, it's an industry nobody really understands. So it feeds into maybe not the best kind of people owning title companies and the best kind of people not doing the right things, and there's not enough regulation. So it's one of those things
it's just
where
gray.
It's gray.
It's always going to
totally
be gray until somebody overhauls it.
Yes, and that's probably not going to happen.
Doesn't seem like that's on
the
agenda for anybody.
Not on tap.
And even now, especially in New Jersey, there's not a lot of houses.
There's not
a lot of transactions happening now.
There's not.
Like for realtors, which in turn is the mortgage guy, which is in turn you. Like you guys are everybody fits into that same realm. If there's less transactions and the same number of people doing it, we have a problem.
The pie is smaller, and I think that feeds into what I said before, where now you have two deals and one has a little bit of hair on it. There's some things, it's like whatever else.
Questionable.
Yeah, questionable things, but I need this deal to close. So you kind of roll forward with it, right? And you hope there's no ramifications coming from it. But in Jersey, one of every three properties has a title insurance issue.
One in every three?
One in every three.
So 33% of deals in New Jersey have a title issue.
Absolutely. And that's only going to grow. I think there was, at the time, last time I looked, there was like almost 600 title companies in New Jersey. Wow. Yeah. So a lot of them are like joint ventures or affiliated business arrangements, something like that, where, again, we're not altruistic. We're not really looking out for the best benefit or interest of the buyer. We're kind of more focused on the money, driving the deal, what's going on, how can we close it, what can we do. And I think a lot of title companies, because it's a gray area, right, they make these questionable decisions. They move forward in questionable ways. They hire questionable people, right? And, once you compromise yourself a little bit and a little bit more,
it gets easier.
Yeah, and then you're compromised, right? And then you have nowhere else to go.
Yep. So how do you overcome that? And you've grown a team. I mean, you're not a one-man operator.
Yeah. I'll tell you this. So you kind of touched on it before. I'm a big man of my faith. God, Jesus, that kind of just rules my life. It's my point. It's my point of beginning. It's what I go back to. And while I'm not perfect in any way, shape, or form, and I make a ton of bad choices, I really try to use this as my guiding light. Should we do this? What's it going to cause us? Should we go back? Because a lot of people don't understand, like a claim is, it doesn't just affect us. Right, I have to file a response. I have to go dig up the file. I have to get back to the attorneys. I might have to show up in court. I have to file paperwork. So those kinds of things kind of take your staff away from doing the work that they should be doing.
And the good new work.
Right, and the good work that's coming in, right? So if I take up on a bad client who's sending on deals that have hair on them, I could isolate 2 or 3 people. And then my good clients who are trying to close deals with everything they have ready are now the ones that are suffering, right? And that's where you hear they're not getting back to me. They don't know what's going on.
It's a vicious cycle.
Right, it's a vicious cycle. But you have to close that deal in order to pay it. So, I really just keep my light on my faith, on my belief. I'm not after money. I'm after making an impact, a difference, a legacy, if you will.
Yep.
So if my decision would impact that, I say no.
Okay.
And I've said no more times than most title companies probably have.
And now your team, you have to guide them and train them and have them believe in the same systems you believe in.
And they do.
That's great.
I'm blessed. Most of my staff has been with me for 7 to 8 years.
Oh, wow. Great.
Yeah. So title is an industry that will really beat you down. So we are always the ones to blame. We're always wrong. It's always us, right? You didn't do it fast enough. You didn't do it quick enough. You didn't do it good enough. The bar is perfection.
I feel like that's the web guy's position in life, too.
It could be. But, we're dealing with all this money, and I get it. People are buying this house, and, but it just seems like when you have the bar at perfection, anything you do under perfection is going to be criticized.
Oh, totally.
Right? And for my staff, that kind of wears you down, right? Being yelled at, you do this, you do that. And so the focus is always on what you didn't do, which is a really tough thing to do. So what we really focus on in Green Label is providing an environment that's conducive to the employee-centric, right? I want to make sure you like coming to work. You spend more time at work than you do at home. I want to make sure that I've got your back, right? If you make a decision, you make a call, I've got you. Whether it's right, wrong, or indifferent, we talk about the things that you should have done better, but that's always going to be there. But I think that's one of the things that really separates us is we have buy-in on the belief. I'm not asking my processors or managers to look the other way. I'm not saying, that's fine, don't worry about that, do this, do that. We're very selective on the clients we take in, and we're very selective on the deals we close. We want to find the way to close it properly, not the way to close it quick. And that's a big difference in the title insurance industry. So a lot of title companies just go out there and say, well, close it, hopefully it doesn't come back to us. Yeah, if it does come back to you.
Rolling those dice in
Atlantic
City.
And the work it's going to create, the havoc it's going to create in your office, and I understand it. Like the realtors, the mortgage companies, the attorneys, they're not worried about that back end. But that back end is a gigantic lift. It's a gigantic workload. And if you're not managing it properly, if you don't know your numbers properly, if you don't interview your people properly, you're going to get yourself into trouble.
It's a lot to think about. It's a lot. Like when you're thinking about title, it's like, somebody that doesn't really know a lot about title, and then to put all those kind of factors into the mix.
It's huge. It's huge. I would tell you, I think it's the hardest industry to sell and get business from, 100%. And I think, again, multitude of factors come into that. It's nobody knows what it is. You're competing against 600 people. Some of them are not above board. So you're really trying to find those people that can appreciate what you can do, how you can do it, and the way that you can do it. And that's, unfortunately, it's a shrinking market.
You got to go find the realtors and attorneys that are driving Mercedes-Benz
and
saying, do you believe in value?
Well, often the ones driving the Mercedes-Benz are the ones that don't believe in value. Not all the time. All the time.
They believe in car value.
Yeah.
That's crazy. Now, how big is your team?
So we have technically we have 4 offices. So
4 offices?
Yeah, so Wall
I didn't know
Township
that. Okay.
is
Wall
where
Township.
most of our operations come out of. So we have 11 people in there. We have an office in Toms River, and there's one person in there who's there, and we have some salespeople and closers coming in and out. Then we're opening up a new office in Lacey on Lacey Road, Forked River, whatever we call it. And then we have one in Union, and so actually
That's 4.
Yeah, our 5th office is actually in Lakewood Ranch, Florida.
Lakewood Ranch, Florida.
Yeah, so we're doing 4.
Advancing into another state.
And we are. Yes, we are. Yeah.
Awesome.
Yeah.
That's great. And that's a little bit of a different market in of itself.
It is. Out there, I'll tell you, it's funny just going out there. Everyone in Jersey is so focused on not enough listings, right? So I think, and again, don't quote me on this, but it's anywhere from like 30 to 40 days worth of inventory. Which means if no houses came on in 30 or 40 days, we would sell out everything. In Florida, and a lot of parts of Florida, it's 5.5 months. So you're really talking about a different kind of
The
industry.
sales cycle's different.
Right. A lot of cash. They don't really need a mortgage. A lot of building, a lot of land. Jersey's kind of just, one of the toughest states you're going to be dealing with because there's nowhere to build.
Yeah.
Right? There's nowhere to build, and the rates are in the high 6s, low 7s. People don't give up that 2.5. So again, it feeds back into that gotta close.
Yep.
Which for me feeds back to my faith. Right? It's going to be okay. I pray every morning. I read the Bible. It's a big part of what I do. So I try to stay out of that. I don't watch the news. I don't feed into that fear. That's.
No, for the Florida, just talk about the Florida side. The New Jersey side makes perfect sense of all that craziness. But on the Florida side, on a 5.5 months, are there enough buyers down there right now?
So I think what's going on in Florida is a lot of people come up with that, insurances are crazy, which they are.
Okay.
Right? If you're living on Siesta Key on the water and your house got ruined, you're paying $30,000 to $100,000 worth of insurance. But if you're inland, so we're in Lakewood Ranch, which is like Sarasota, insurances are fine, right? It's fine. The cost of living is a little bit cheaper. So, but the sales cycle is still the same, right? You still have to get out there and see the realtors and whatever. I think, again, there's a misunderstanding about Florida insurances, where they're living, the hurricanes, the disasters. But we saw this in 2001, right? That big hurricane hit, everyone flooded out, and you get a house for pennies on the dollar.
Yeah.
So now that's kind of there. I think there's more building that's going on. But it's different because there's a lot of communities. So Florida has a lot of HOAs, communities, where Jersey has, far fewer.
Oh,
so
yeah.
it's just a different economy.
So where do you think you're going to see your biggest growth now?
I'll tell you, I'm still focused on Jersey. Jersey's my baby. I'm born and raised here, live here, been here forever. It's really where we have the biggest impact. The reason we opened up in Florida was because there's a lot of transient use, right? A lot of people in Jersey go to Florida or vice versa. It seems to be just the
Hand in
states are
hand.
connected,
Yeah.
right? They're connected. So we're really primarily focused on Jersey because I do think the market's coming back. I do think rates are going to drop. For me, I do think there's enough bad decisions that title companies have made that are going to feed well, into my growth. But Florida offers a good opportunity as far as expansion. Again, but it's not something we're hyper focused on. It's more like a growth aspect.
It's there to start planting the seeds.
100%.
Great.
That's where we're at.
Awesome. I love to see this. I love to hear that you have 4 and opening a 5th.
Yeah.
That's fantastic.
Yeah, we're rolling.
How many you want to get to?
You know what?
Is there a number?
No, I don't have a number. I kind of just go off of what works and opportunity. So I'm an opportunist. I could have 10 right now if I wanted to, right? I could be doing 3,000 deals if I wanted to. But, again, we go back to that. Is the deal right? Do I want to work with that person? Is that somebody that aligns with what we believe?
Sure.
And there's more no's than yes, right? So I'm sure you agree. Saying no is almost more important sometimes than saying yes.
Yeah,
as far as your time comes.
I kind of feel like that. I see it like when I could tell someone that walks in the door and you say like, "Oh, is this gonna, is this gonna be the right client for us? Are they gonna cause us more stress and aggravation at the end of the day?" And you have to start to think about like, is that the right client? And over the years, you've had to take some because
Yeah.
You had to keep the place rolling. But as time goes on, you want to try to find those right deals.
Become more established, and again, it's not. I don't mean to say that realtors or attorneys or whoever are doing things wrong. It's just a deal comes up, and they're like, "Hey, we can close this deal. What can we do, and what can't we do?"
Yep.
And I don't mean it in a way that anyone's doing anything illegal or wrong. It's just there are deals that create more chaos within an office, take more time, and often the payoff isn't there. So that again leads to, well, they're not getting back to me. The policies aren't going out. You're not doing that. So it's all interconnected, and I think a lot of title companies just look at that front end and they don't really process the back end of what that's going to do.
What that looks like.
Yeah, rob Peter to pay Paul. We'll deal with it later.
Yep.
But when later comes, it's like, we don't have enough people, and then it's, you start getting into that. What do we do here? Do we not do this? Do we do this? So, and that's really what title is.
Well, we've got a title education today. We've
Yeah.
learned a lot along the way. So, Steve, it was great having you on today. Let people know where they can find Green Label and your website, your socials, etc.
Sure. So it's www.greenlabeltitle.com. We have a fantastic net sheet calculator on there. So if you're a buyer or seller and you're looking to find out what your fees would be, you can do comparisons. It'll calculate taxes for you. You can add in any bank fees, kind of give you an idea of what you're looking at for upfront costs, sellers, those kinds of things, your net sheet. It's kind of what it is. My office number is 732-722-7373. We have offices in Wall Township, Toms River, Lacey, soon to be coming, Union County, and Lakewood Ranch, Florida. So, and my cell, I'm available all the time. Whether it's my deal or not, I'm always looking to give good advice, sound advice. I like being someone who's contacted, who's somebody a go-to, is 732-674-4390. So I always say go green with Green Label Title.
Awesome. Again, thanks for having you on. Thanks for making time for us today. This was great conversation, and I look forward to people learning something here today.
Thanks, Tom. Appreciate it, buddy.
Got it.